Hello, sense of things. It's Jeff and Ron once again for another episode of the Sense of Things podcast. Welcome to the show. Today, we've got a lot going on, but first thing we want to say is today there was a big tragedy in Washington, D.C. Um, Plane crash collided with a military helicopter. I just heard, just as I was listening to the news, apparently there was like 14 members of the U.S. skating team that were on the plane. So it's just really going to be tragic to hear what's going on with all that. So our hearts and prayers go out to their families and everybody involved. On today's show, we're going to cover a little bit of the earnings season. Ron's got a couple of interesting indicators, like he always comes up with. So we'll see where that comes in, and we will be right back with you in just a second. All right, folks, welcome to the show. It's Jeff and Ron here. Mr. Ron, how you doing, buddy?
We are doing good, Jeff. Yep, earnings season's on its way. I know you got a few good things. The Fed came out yesterday, kept things unchanged. I think that was almost like 100% certainty. I know people are looking at,
I,
two or
I
three rate cuts
absolutely
this
love, yeah.
year.
I love where the market makes a big move when, yeah, it's like there
Crazy.
was not a chance on the earth that they were going to make any change to it.
And there was a huge sell-off in the first hour after the
I know.
announcement, and then it came back.
It's
I
it's
just
so
think it's just the computers. I mean, 70, I always say it's over 70% of the market moves is just computer algorithms,
yeah.
but who knows? I mean, just
Yeah,
crazy.
it drives me crazy because it just makes no sense. I've started to really look into who makes Prozac and invest in them because I think, but unfortunately, there's no Prozac for the computers. That's the challenge that I find.
They're making money, and sometimes they're just scraping off cents, not
Yeah,
necessarily dollars.
yeah.
It's good. All right. So what I got is I saw this picture because I had that funny picture, I think it was 2 weeks ago,
Mm.
of the guy sitting with a flat tire with a pickup full of about 50 tires that he was hauling. So I
Okay.
saw this picture and I'm like, you know what? This is a pretty good picture because back in the day, now I know if you go to a concert, you could see a lot of this, but you know, what happens if you got to plug in a guitar here or the guitar plug pulls out? Who knows with all this spaghetti, which one is your actual guitar cable?
Well, and the worst part is when something's not working, how do you diagnose the problem?
My whole point is, look, I know the roadies do an unbelievable job to set up these things, but how long does it take to break this down, sort it, put it away, go to the next city and redo it again and make it look almost the exact same thing? Now,
That's
obviously, this picture is a bit dated. I know there's,
yeah,
less, let's just say, there's probably about the same equipment, but less cables. But I
yeah.
just think this is a fantastic picture
It's
of
awesome.
just kind of looking at chaos.
It's awesome. I love recently I heard something from Gene Simmons. And he's so funny because he's doing this thing right now where he's like, well, hey, I'll just go play in like a little small venue with his new band that he did. And he's like, man, this is so much better, because I can go do this and I don't have to pay for all these roadies and all this stuff. And it's like, well, it's okay if you're Gene Simmons. Everybody else is called a garage band and they're just barely making enough money to survive.
Well, last quick thing. I know we're taking a little bit of a right turn here, but I was never a Grateful Dead guy. Not that I can't
Yep.
appreciate them, but from what I understand, they used to have there's touring in the 60s and early mid 70s, the towering
Yeah.
speakers. And
Oh
what
yeah.
they did was when new technology came out, they donated all of their equipment when they brought in the new equipment to all of the small up and coming bands around the country. So this way they didn't have to go out and buy stuff. I know
Pretty
that's a
cool.
true
Yeah.
story. I'm probably screwing up some of the details.
Now that, but I think that, and that was pretty much them. I mean, as it was. So,
Yeah. So I
It's
was
pretty
kind of
amazing.
looking at some bookmarks, and I came across an old bookmark of mine from a great website called Guru Focus. And
Okay.
you could do hundreds of charts and adding things to charts. And there was two charts that stood out to me. One was the Buffett indicator that I've heard about for a long time. And I decided to put up the chart and the explanation because this goes back to the early 70s. And anytime the Buffett indicator has truly spiked, typically a recession or a significant pullback is followed because it's a valuation indicator. And it's
Hmm.
some crazy fakakta formula of the ratio of the Wilshire 5000. Oh, by the way, there's only a little over 3,000 stocks today.
Hmm.
Over GNP compares the total market value of all publicly traded stocks in the Wilshire 5000 index to the GNP of the United States. Whatever
And
it
a
is,
partridge in a pear tree.
exactly. But the idea here is that the Buffett indicator is at an all-time high.
All
So does
right.
that mean that, I mean, look, we've been talking about the market being overvalued for 12, 18 plus months now. And the Buffett indicator, look, I mean, the market can, be irrational for a hell of a lot longer than we could stay solvent. But I
Hmm.
just think that this was an interesting indicator. I'm not sure if you've ever followed this or have heard of it.
Honestly haven't. And I think the interesting thing is, I mean, value has been the problem is you have to assume value has been attractive. That investing approach has been attractive, and it just hasn't been. And I just I don't want to say the words that it's different this time, but it is a little bit different. And I don't know. I mean, it could happen. It could continue to go up. It could go past anything I could expect. I mean, we talked about LEI on the last show. I mean, I have rarely, if ever, seen that be wrong. And it has been unbelievably wrong for a long time.
Yeah, well, over 34 straight declining months.
Yeah,
But,
I know.
another interesting thing to this that I had heard was as opposed to 20, 30, or 50 years ago, because of the amount of baby boomers,
Yeah.
they're status quo. And I thought that
Mhm.
was an interesting point, meaning status quo, meaning they're not selling anything. If
Yeah.
the market goes down 10%, they're not selling anything, right?
Mm-mm.
Because whatever they have set up for income is not going to be changed. Whatever they have set up for growth isn't really going to be changed until they
Yeah.
die, right? Until they pass along their assets. And I thought that was a very good thought process of passive investing because what over 50 or 60% or more of the wealth is from people over 55. Actually, I heard
Mm.
closer to 80%. So
Yeah.
if they're more in a status quo mode of income and conservative growth for their portfolios, they're not selling.
Yeah. Well, and I think the common thing that we heard, I remember you and I are contemporaries in this business. The common thing was, well, when the baby boomers get there to retirement, they're just gonna, take everything and put it in income stuff, and they're not going to invest in the
Bonds.
markets, and the market's just going to be terrible. Well, of course, they got there, and bonds are, earning 1%, and they just couldn't do that. So they had to rely on growth. They had to rely on growing their assets and being able to liquidate some of that. And you look at, oh, the safe bonds. Well, if somebody had done that a year or two ago, they'd be down 20, 30% if you
Yeah.
were in longer bonds. So I just, it's an interesting factor. And I think it's a major factor with the amount of index funds that control a big chunk of the market right now.
The
The three
majority.
largest index funds are like 30 or 40% of the market. It's huge.
Yeah, and then my other indicator, I always hear people talking about it, but I had to research it a little bit,
Okay.
and it's the CAPE ratio. So the
Okay.
CAPE ratio is more of a cyclically, CAPE stands for cyclically adjusted price earnings ratio.
Mm.
And when you're looking at this, I mean, you can see how far back this goes. Obviously, it was a different scenario back there. There wasn't
In
electronic trading in
1871.
1871. Yeah, following the Civil War. But, I always think that right now, other than the dot com, we're at
Mm.
like the second, third highest CAPE ratio.
Yeah.
So I know people say, well, no, there's still value there. It's not necessarily overpriced. This is doing an aggregate of the 500 S&P stocks, and it's showing it probably is overvalued if you're looking at a cyclically adjusted PE ratio. What are your thoughts?
I think it's another one of those things. Okay, it's one of those things you can make a chart of anything and make it look different. I think if you took this and said, all right, well, let's look at what I would consider the common era. So let's move it to, let's say, 1980 and run this chart again. I think you get a completely different chart at that point. It looks worse than I think it actually truly is. And, we're in a whole different world than we were even pre, I mean, you really see modern economic theory starting in the 90s. So I think, this is one of those things. It's like, okay, I don't know how interesting this is truly going to be, but
Well,
I just,
I'll tell you what. I mean, if you take a look here, this was when Reagan took office, and this was
yep,
82, 83, when
yep,
we had the amazing bull run for essentially 18
forever.
years for
Yeah.
the dot-com, right? Then we see it pull back and meandered
Mhm.
along, right? We had,
The
unfortunately,
2008. Yeah.
9/11. We
Yep.
had the financial crisis, right?
Hmm.
This was the
Yep.
financial crisis that pulled back. That was also a generational buy. And
Hmm.
even with COVID here,
Yeah.
right? I mean, it was, even though those were great buying opportunities also,
Hmm.
we're looking at generational buys and generational highs.
Yeah.
So I don't know. Look, I think it's something to keep an eye on, but I've heard this
It's,
being more and more talked about with a lot of market strategists.
yeah. Well, like I said, once again, it's interesting. I think one of the big things I'm seeing is, people talk, oh, things are so overvalued. And then you look at, let's say, an NVIDIA that's a massively profitable company. After the little pullback in it this week, it's 30 times, 30 times forward earnings at this point. I mean, a company that makes buku tons of money, and it's still only 30 times forward earnings at this point. So,
Well, I'll tell you what. One point I'll make about NVIDIA, and then I know you got
yeah,
some stuff you want to show. The way I look at it is, I understand people are paying up for the future of NVIDIA's
sure.
earnings,
Yep.
but it's got to pull back another 20, 25% for me to say, hey, you know what? This is a great buy. I mean, it's got to
Mm,
get down into the
yeah.
90s again, where it was, on that quick pullback in early August, for me to say, hey, you know what? This is a great buying opportunity. But
Yeah.
people are like, hey, don't worry about where it is. Keep buying it. It's going to
Mm,
200. I can't
yeah.
go by that investment philosophy.
Well,
What do you
on
got?
that point, well, here's what I've got on that point. So I think one of the biggest things that I got lots of questions this week from clients was, what on earth happened to my account this week? And this wildly
Ah,
obscure AI stock or AI company out of China, DeepSeek, claims that they were able to create this incredible AI tool last
hence the
week.
word claims.
Yeah, claims over the last few months they created this. Now, the company that created this is a hedge fund in China, um, largely supported by the Chinese government, and they claim to have been able to create this thing for 5.6 million. So of course, especially Nvidia stock got clobbered this week, and the reason for that is, well, if they can do it for 5 billion, 5 million, why are we spending billions of dollars on all this? Well, as you start to unravel the onion a little bit with this thing out of China, China is looking at losing their source of information in the form of TikTok. And amazingly, this thing pops out right about this time. But the other piece of it is, um, I listened to an interview with the ChatGPT or OpenAI CEO, and he's like, yeah, these guys were hitting chat like just boom, 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 hitting it hard. And it was basically gathering information. So, yeah, it didn't take them much to develop it. So, I see the equivalent of, if you look back in history, the Daimler brothers created a car, and then other people created cars after that and said, well, I created a different car. Okay, well, that doesn't mean you created the car, and it doesn't mean you have that great, of ability. So let's see what this company can do going forward on being innovative. They took
Well,
other people's work and then they added a little bit of their own tweak on top of it.
in the end, I know how this is going to sound.
Yeah,
I mean, I was in the tech world a long time. It doesn't matter if you're 5 or 10 or 15% faster.
yeah.
It's what are you doing with the information? What is the
Mm-hmm.
information you're getting back? So if I get it back 5% faster, what does that mean?
Yeah.
Am I gonna solve cancer faster? I think this was all hype and BS.
Oh,
And I
BS beyond
and
belief.
I
Yeah,
understand too, the last quick point is that they were talking about, well, if it's faster, that means it'll use less energy. So the energy thing, so like, okay, give me a break. This is 5, 10 years away from a reality.
yeah,
It's
yeah.
ridiculous. The machine, no pun intended, but the machines took over that day on the selling.
Yeah. Yeah. Oh, I think so too. But I think it was just other stupidity. And, I looked at what went down in the market, and there were so many things that are completely unrelated to AI that were down. I think the market was just looking for an excuse to sell down, and I don't want to say manipulation, but there's some manipulation going on. But like I said,
100%.
once again, it's just, don't believe anything you hear from the Chinese because
I don't
they lie and they steal.
know.
And it's just, I will not invest a dime in anything from that country at all because I do not trust the financials to, to shake a stick at.
I
We
got you. What
don't
else you
have
got?
any exposure. Okay, well, let's get into the good, the bad, and the ugly.
By the way, the that movie theme has been the text notification on my phone for like 15 years.
That is awesome. That is absolutely awesome.
Now I'm
Well,
going to get a bunch of texts.
for you, Ron, the good, the bad, and the ugly. We are in the middle of earnings season. And I just kind of went through, especially for this week, because we're getting into the meat and potatoes. We saw some really good numbers out of the financials over the first day, because they usually hit right at the beginning of earnings season. So we had a lot of the financials, a lot of the big banks looked really good. Some of the regionals were a bit ugly, and they're continuing to be ugly. But if you look at some good ones, that as I started looking at this week, Caterpillar, MasterCard, actually Visa, I just noticed when we were looking for something before
So did
this.
Visa.
Yeah, MasterCard and Visa, just fantastic. Just a lot of transactions happening. Royal Caribbean was outstanding. And it's been a stock that's gone up quite a bit since the pandemic. They've spent billions of dollars on new ships, and they are just firing on all cylinders at this point. And it's not necessarily true of the other cruise companies, but Royal Caribbean has been just on fire, and they continue to be on fire. And it's been interesting watching because the market will listen to their conference call, and I can pretty much guarantee you the stock will pull back here for a while because the market listens to the conference call, the same one I listen to, and somehow they pull out of it after Royal Caribbean says, yeah, we're basically booked for the next 2.5 years full. Every cruise is booked for the next 2.5 years full. And somehow the market goes, yeah, but what if they don't make as much revenue as they made? They're booked for the next 2 years.
Right.
Uh, Brinker International, which is I'm a Dallas guy, grew up in Dallas. Brinker International, founded in the Dallas area, has been a just ungodly mess. They own restaurants. I don't know what happened, but all of a sudden they have taken off like a rocket ship. Both earnings and revenues just off the charts, up like 26%. So I don't know what's happened. I have to look into it more. I think the biggest, coolest thing in the good side was IBM, Old Blue, was really in a big comeback mode, and their biggest revenue came from their AI consulting. I mean, with Watson, they were kind of early on in the whole AI world, and their AI consulting is just taken off like a rocket ship. So it's well worth taking a look again at Old Blue as it's gone off and gone. The bad, Tesla, boom, missed on both sides. And another just interesting look at the cult of Elon. They can miss revenue numbers, they can miss earnings numbers, they can be down on the number of cars they
Doesn't
sold.
matter.
Stock went down, and then the stock was up 4% at the close today. Don't get it. Whirlpool, Packard is Peterbilt trucks, and I think Kenworth they own now, really down quite a bit. They've struggled for the last several years because there was a major upcycle at the end of the Obama administration where they basically took all the old trucks off the road and said they have to meet certain emission standards. So there was a massive shift and a massive purchase, and that now they're just kind of getting sucked up a little bit. I think the most notable was Lockheed Martin, which is interesting for me because there's got to be a lot of replacement because we gave a lot of our old stuff to Israel and to Ukraine, and we've got to replace that, but it doesn't seem to be rolling through. The money from the government doesn't seem to be rolling through Lockheed Martin very much because they were down both on revenues and earnings, and with the Doge and possibly cuts in spending and things like that, that does not bode well for the investors of Lockheed Martin. The ugly, it continues to be ugly. Boeing, I think, leads the ugly over this last, God, I mean, 2-3 years that they've been having issues. The strike that they had that just was settled a few weeks ago had a massive impact on them and all the people around them. All the other the suppliers had a massive impact. 1-800-Flowers, Ethan Allen, Murphy Oil, all down pretty massively for this quarter. So it's interesting. Ron and I have talked about this. Ron, you have said this over and over with oil. You think maybe there's some hope for the oil industry, and it's a lot of manipulation.
Well, I mean, if you look at it, oil was uh, about $81. January 15th, it's now down to 73.
Yeah.
That's, less than 2 weeks later, 2 weeks later. So, yeah, I mean, I just think oil is just a no touch.
Yeah. Well, and I mean, it's just been one of those things that I can't figure it out a lot of times. And when we looked at, I think you've done such a great job with your research and showing the annual charts of the different sectors in the market that we did a couple shows back. So if you missed that one, go back about 2 shows, and Ron really walked through the market. And if you look at oil, I mean, it pretty well consistently runs towards the bottom of the chart. It's usually most of the time in the 20%. So
And it'll
it's just
spike
not in
like
there.
every 4 to 6 years.
Yeah.
That's it.
And it spikes up and then it's down, back in the same area again. So you can't really tell when it's going to happen. And, I think there's a lot of other areas that are a little bit more consistent as it goes at that point. So, that said, I think we're in an interesting time. It's interesting to see that the techs are still continuing to do well. Right before I got on this call, Meta and Ron and I were commenting on this. Meta actually came in like 20% year over year higher in revenues, which we're still trying to figure out where all that's coming from at this point. But I think, once again, it is the out of all the advertising platforms, and I say this from being a digital marketing person coming from a digital marketing world, utilizing, that platform to advertise, it is probably the best advertising platform that exists out there. And their work in AI has been, pretty exceptional as far as being able to really, get your audience right when it comes to that. So I assume that's it. I haven't looked into the numbers. I will do that as we go. Ron?
I mean, they may have great numbers and
Yeah.
they may be great with AI, but I don't know anybody that really uses it on a regular basis. They're using Instagram. I post our podcast on there,
Yeah.
right? So my whole point is, what data are they gathering? Because I pulled off all my personal information on there 10 years ago. I'm
Mm,
not saying, I'm ahead of the curve or whatever, but
yeah.
I talk to other people. I don't know really too many people that are using Facebook for
Mm,
communication. I know some people are using it for business, but for
mm,
just personal info, information like, hey, let's take a picture of my dinner when I go out.
mm,
I know there are some people that still do that, but how often? So I don't
yeah.
know the data they're accumulating. Maybe they're just scouring the internet for stuff. I have no
Well,
idea.
the interesting part is during the pandemic. So I did this. I taught a course on digital marketing for realtors, and I did some of the data. The largest and fastest growing segment of people on Facebook is age 65 and over. That's the fastest growing. So, it's the baby boom generation that kind of got pushed onto it during the pandemic era, and they're the ones that are using it, and so they're the ones who have the money to spend. It's interesting that you figure a lot of the advertisers that are on there, you figure they're looking to grab the younger crowd, and the younger crowd's going off to other places. TikTok's just getting their advertising system right, and it's pretty good. It's basically the wild wild west at this point when it comes to TikTok. So that's a big problem for a lot of these people that use TikTok as a major vehicle. If
Yeah.
it gets pulled out, I mean, an issue big time. And I personally, from an advertiser perspective, Instagram is a pile of garbage. It doesn't work right. You have to really gather a lot of people watching for it to work exceptionally well. And I personally just am not a big fan of the
Well, we'll
platform.
have to see how that
Hard work.
TikTok soap opera ends.
Yeah.
I think we'll see something here by the end of Q1, but
Yeah,
it'll
I
get
I think it's
interesting.
a possibility that somebody like a Microsoft picks it up, and they'll destroy it when they do it, because they just are really
I don't think
terrible.
it's going to go to Microsoft.
I don't know. I mean, I just think somebody big
Google's the
like
one
that.
that should buy them, but I don't think that's going to happen.
Yeah, and I mean, Google really doesn't have a social aspect besides YouTube at this point. So it would be interesting. I could see Google buying it kind of on the same lines as YouTube, but I think they see them as a major competitor. And they've quite frankly been getting their butt kicked by TikTok. So that I could see them just picking it up just to take out a major competitor or do something with it at that point. But I don't know. I think it's going to be a big company that picks it up. And, like I said, if it's a Microsoft, they'll completely destroy it like they've done with anything else, in that world. That's just not what they do.
We shall see.
Absolutely. Well, folks, thank you for joining us again. We are here for you. We do these shows for you. Make sure that you take a look at this, share it with somebody else, and make sure that you are a subscriber, because we do these shows every week for you. So thanks a lot, and we will see you guys back here the very next time.